to the presentation on the annual financial report form, the frequently asked questions. I'm going to share, I think. Oh, it's the right one. Most of the material that we're going to talk about on this is based on questions that either Ricky and I received this year while you were completing the AFR, as well as feedback from our field staff that examined the AFR earlier in the year. As you know, there were changes in the AFR for 2019 that were hopefully going to move us more towards the enhanced regulatory report, which added information to the traditional regulatory report that we have always been using. We are going to focus on some of these changes in this presentation. We had planned to audit those changes in 2019, for 2019 and 2020, but as you know, COVID reared its ugly little head and things got complicated. We started doing the remote auditing, and it just seemed there was too much to add all of those changes to the audit. And so the board made the decision to go ahead and continue the 2019 audits from that point on to be based on the standard regulatory basis that you're all used to, instead of going to the enhanced regulatory for 2019. However, the changes are still in Gateway, and we will be doing your 2020 with those changes. So we're going to go over those because there were some hiccups with that. So this year, and if have not had your audit completed at that point, they were going to show your financial statement with the old basis, which was the beginning balances, receipts, disbursements, and ending balances of all the funds without all of the detail in the financial statement itself. It's still going to be a supplementary schedule. Okay. And then the additional notes that we were going to have for debt schedule, leases, and transfers, those are not going to be included in the financial statements for 2019. This also means, because we are deferring the changes for 2020, that moving capital assets and depreciation into the financial statements will not occur for 2020. So you can heave a big sigh of relief on that. It gives you another year to work on those before you're actually going to be audited, and we're actually going to place an opinion on those. But you still need to work on them. It's a deferral. It's not gone away. You're still going to have to put that information in the future. So when we come into audit, one of the first things we do is we look at your financial annual financial report, and we look to see that it ties to your prior period reports. So the ending balances of your funds actually roll over in Gateway to become the beginning balances in the subsequent year's report. However, if you upload, which most of you do, your financial data from your software, those beginning balances on your financial data will overwrite the rollover balances. So you should always check your beginning balances against your last year's financial statements that were in your audit report and determine if any of those changes are significant. And by significant, I mean more than a few dollars or some rounding differences, things like that. If you find a significant balance, you do need to determine which amount is correct. Was last year's ending balance or this year's beginning balance? And the next step is to determine why that change occurred. The most common is you've made a correction in the current year that affected data in the prior year, but there are other reasons it might happen. If you need any assistance, if you find this and you need assistance with this, be sure and call Ricky and I. We'll be glad to help talk you through it, what needs to be done. And then if you have determined that your beginning balance is correct, what has been uploaded really is the correct balance, keep all of that information for audit so you can show it to them. If it is material, it may need to be restated, but the field staff will help you with that. If that will give you guidance on that if that happens, so just keep the explanation. One of the reasons for using the Gateway application is that it allows for comparability between the different units' financial statements. This information is then available to the public, so your citizens, the General Assembly, people doing research, all have access to this, and hopefully cuts down on any direct requests they make to you for information. The problem is if the data is not comparable, the process doesn't work well, and they will generate probably more work for you. The chart of accounts was developed for counties to provide that standardization of county funds. There are funds that are the same fund from county to county, but might have a different name depending on what your custom or history has been with that. But since they are the same names, we want to use the same fund for that, and that's where the standard chart of accounts comes in. It gives you a fund number for that. So for example, you can have one county might call it county highway, another might call it MVH, another might call it motor vehicle highway. They're all the same fund, they just have a different name. Make sure you find the standard name within Gateway and use that for that fund. If there is a standard fund available, please use that fund and don't create a custom fund for that. If it's a statutory fund, if it's in the chart of accounts within those 2000 series, it is a statutory fund, there is a fund number for it. So use the chart of accounts fund number. You have the ability to create custom funds, and those are for your local funds that are unique to your county or set up at the county level. Your grant funds, as new grants come in and you're putting those in separate funds, capital project funds, debt service funds that are unique, those are your locally developed funds, and those you will have to do a custom fund in Gateway because they're not going to be in that standard. Okay. There were some special cases this year that I want to go over a little bit. There was some confusion on the MVH. The MVH and the MVH restricted are together one fund. So the MVH restricted is a sub-fund of the MVH, but it is very important that they are shown separately on the AFR because they're tracking that information separately. So don't combine them, keep them separate. And they each have a separate fund number, and those fund numbers are standard numbers that are within Gateway. Make sure you use the MVH number, 11, I'm going to go it backwards, aren't I? So make sure you use 1176, think about it, 1176 for MVH and 1173 for MVH restricted. They're set up a little bit differently, so you want to make sure you don't cross those over again, so that when we're comparing those, we're getting the correct information. We do prepare a report for the General Assembly on the MVH, and now includes that MVH restricted. It pulls information for all 92 counties and from the cities and towns that have those funds as well. And to show the disbursements from each fund, what we found when we ran the report this year was we were missing a lot of information. So we want to make sure that we get that cleared up going forward, that we use that fund, the fund numbers correctly, and get the data in the correct fund. If you have any questions about this, or we had people call us where they might have gotten switched, flip-flopped or whatever, call Ricky and I. We'll help you get it straightened back out again so that they're we can make the corrections within Gateway to show them correctly. And we did have some that I think it was easier just to create the custom fund and move all of it there. We don't want to do that. We want to get them in those standard funds. So call us if you have any problems with that. Ricky talked about a little earlier today on the transition from local option income tax to local income tax. So we had funds for CAGIT, COIT, CEDIT, and public safety LOIT, and those all went away, and we had local income tax. So we had given you guidance that the CAGIT and COIT, which were Fund 1110 and 1121 for certified shares, were not to be used, and that money was then to be moved into your general fund. What we're seeing still is that those funds are still on your AFRs. The numbers are still available in Gateway. Part of that is oversight on our part. We wanted to keep them for the transition period, but we didn't get back on top of it to take them out, but we are going to be doing that, to take those out so those will not be available to be used because those funds should no longer be used. So you want to check through this year and make sure you've got them in the right place. So seated is still the same fund number. We just renamed it to LIT, Local Income Tax, Economic Development. Lowett Public Safety was kept the same fund number. We just renamed it to LIT Public Safety. So those didn't have to be moved, but they just have a different name to recognize the LIT. And then the special purpose Lowett funds, you were supposed to close those out and transfer those balances over to the LIT Special Purpose Fund, Fund 1114. In addition, we are going to be removing from the settlement funds the Cadget, COIT, and CEDIT property tax credits. So you'll only have the local income tax property tax relief fund to use, and that's Fund 6203. Once we started the cyclical reassessment, it was not necessary to set up a separate reassessment fund each time reassessment was done. So there was one fund established, and all of the reassessment expenses should be from that fund. So the other two that were on there for 2015 and I can't remember the other year, those should no longer be used. You should just be using Fund 1224 for all your reassessment funds. The same thing, similar to that, to the E911 funds. There is one statewide E911 fund, and you get the money from the state, the distributions for to run your local PSAP, and that fund should be 1222. Those earlier funds for the landlines and cell phones, those should no longer be used. Another thing we found is that there are some counties still using the Child Advocacy Fund, which is Fund 1115. That was based on a fee that was collected by the clerk. 50%, historically, 50% of the child abuse prevention fee was kept at the county level and 50% went to the state. But all of that fee goes to the state. There is none kept at the local level. So those funds should have been closed out and they should no longer be used. On the county auditor's webpage, there is the chart of accounts so that you can get the actual chart, the funds and statutes that go along with this. There was also a chart of account instructions, and a lot of what I'm going through is in that. So it's a good thing to use if you're not aware that it's there, to pull that down and make a copy of it and look at it. Because we did see some issues with the classification of receipt and disbursement. It was not going to be a problem this year because we are not going to put an opinion on the detail of receipts and disbursements. It's going to be a supplemental schedule still. But going forward, we will be. So it's very important that we start working on those and getting those corrected. So one of the things we found, and it may just be, again, because that we were hurried this year or everything coming down on us, but there were some where, other than the general fund, every other fund only had other receipts or other disbursements. It did not classify them by what they actually were. It's an easy default to do. Obviously, Gateway will let you do that, but it is not the correct classification for most of your receipts and disbursements, and we need to look and make sure we're getting those right classifications. The best time, and the time you should be doing this classification work, is when the receipt comes in. You've done it once, it's in your financial records correct, and then it will flow into the AFR correctly. Okay. So you're going to have revenue lines for your receipts, you're going to have appropriation lines within your financial software, and that way you can post to those correct classifications. So on the receipt and disbursement account slide, I've listed the major classifications for receipts, and they should be pretty familiar: taxes, licenses and permits, intergovernmental, charges for services, fines and forfeitures, and then there is the other receipts category. In disbursements, you've got personal services, supplies, other services and charges, debt service, capital outlays, and then other disbursements. There are some minor classifications within these to help you categorize them for your own tracking purposes. We'll go over those as they come up. Okay, and as we discussed last year, the enhanced regulatory is moving your financial reporter closer to GAAP reporting without forcing you to move to full GAAP reporting. So these additional details are important so we are producing accurate financial statements. We did not spend a lot of time last year, and we should have, on talking about this, and I think we probably wrongly assumed that this part was okay, but when we started actually auditing that, we realized there were some issues throughout the counties. So this is why we're discussing it today and going over it. We can help you with the classifications. If you have questions, always feel free to ask us, but really no one knows better what these receipts are or what these disbursements are than you do. So you really are the expert on these, and so when you get them classified again in the beginning and what they need to be going forward, it's going to save you a lot of time later on. And as an added note to the previous slide, they did this year, for 2020, they've already taken out the option to use local option income taxes as a receipt because those no longer exist. You're just going to have your lit categories. So in your receipt categories, the first one is taxes. This includes your property taxes, your income taxes, your local income tax or lit, use taxes, and any other taxes that are assessed by or imposed by the county. So property taxes are derived from a tax rate applied to the assessed value of the property, real or personal. The tax rate is set by the county, although state law does set limits. The income taxes are derived from a rate applied to an employee wages, and this rate is also set at the county level. The other taxes might be motor vehicle excise surtax, wheel tax, which is a rate set by the county, innkeeper's tax, food and beverage taxes. These are all additional taxes established by the county. They all go under taxes. Special assessments is a little bit different. These are amounts levied against certain properties and not all taxpayers in your county to defray all or part of the cost of a specific capital improvement or service deemed to benefit those property owners. So drainage comes to mind immediately. Those are assessments that benefit certain properties, and so the assessment is geared towards those properties to pay for the ditches and drains in that. Intergovernmental receipts. These are revenues from other governments. So the state levies a tax and gives you a portion or shares that revenue with you. That's where intergovernmental comes from. Okay. They can be operating grants. They can be capital grants. Your excise taxes, FIT, CVET, MVH, local road and street, those are all intergovernmental revenues that you receive from the state. They're sharing those revenues with you. An operating grant is for running a program. For example, the Community Corrections Grant would be an operating grant. A capital grant is for a public works project or to purchase capital assets. So if you get a grant to purchase a big piece of equipment or get a bus, I don't know if you have transportation, that would be a capital grant. License and permits is probably pretty straightforward. These are classifications of a receipt that you've collected when you've given someone a license or permission to perform some activity in the county, such as construct a building, operate a restaurant, legally carry a gun. These all fall under license and permits. Charges for services. Would be a certification fees, transfer fees, copy fees, landfill fees. These are fees that you are charging that they are getting a specific service for. Fines and forfeitures are imposed for the commission of either statutory offenses or ordinance violations. So your court costs and fees, your ordinance violation fines. This is hard to do when you don't have people looking back at you. Just say it. And then you do have the other receipt category. And we're not saying that is always wrong. It just can't be the only category that you use. The minor classifications under other receipts include interest income and sources of income that are less frequent or smaller in amount that do not necessarily need separate identification. We've also put interfund loans and other financing sources under the other receipts in Gateway. That includes permanent transfers, proceeds from the sale of assets, or proceeds from issuing debt, contributions, and a final catch-all of other receipts. okay? Just please don't default to other. Make sure you've looked at it and ensure that it doesn't fall into one of the other categories before you use the other receipts. Going on to disbursement. We really don't get a lot of questions on personal services, so this is the amount that you're paying to both permanent and temporary government officers, deputies, and employees, their salaries, wages, per diems, any other compensation, bonuses. The minor classifications within this include salary and wages, employee benefits, retirement benefits. The supplies are goods and purchases that are used to provide services. You kind of use them up, like office supplies, cleaning supplies. And so there are minor classifications within that for office supplies or other operating supplies. Other services and charges include payments for services that are paid through a contract, like legal services, engineering services, consulting, your software programs, your licenses. Also communication costs, cell phones, internet, any advertising costs, printing costs, utility costs, those fall under other services and charges. Okay. The repair and maintenance are costs for maintaining the assets. There's sometimes a question whether something is a maintenance or a capital outlay. So again, you should be able to look at it if it is a repair or something to keep it working. Then it falls under other services. If it's actually extends the life or rehabs it or renovates it, then it's probably going to be under a capital outlay. If you have any questions or you want to brainstorm or bounce some ideas off us, again, call Ricky and I. We'd be happy to talk to you about it. Capital outlays are your disbursements for the acquisition or addition to your land, buildings, improvements other than buildings, machinery, and equipment. Depending on your county's capitalization threshold, you may have capital outlay that isn't added to your capitalization, your capital asset detail. So it's possible to purchase a laptop for $2,000 and your capitalization policy is $5,000. That laptop is still a capital outlay, but you're not going to then be able to look at capital outlay and say, does that match what I added to my additions this year? There can be differences depending on that capitalization policy, but you should not be including maintenance and repairs, painting, overhauls, repairs to vehicles, things like that. Deductions, these are withdrawals from agency funds, so your payroll withholdings, your settlement funds. Other financing uses is a classification for other uses of county funds that are not really disbursements, such as when you purchase investments. If you do an interfund transfer or interfund loan repayment, that's money going out of one fund into another, but it's not really a disbursement, so it goes under the other financing uses. And again, if you have questions about any of these as you're going through, even during the year, ask us, because if you get it posted properly at the time, it's going to be so much easier that you won't be making corrections at year end on that. We are auditing this, so if it is material and it is not classified properly, there are going to have to be corrections made. So that's why we're saying up front, we want to get this as correct as possible before loading that AFR onto Gateway. We do get some corrections on corrections of your financial errors, records. You find an error and you're not sure how to correct it. We're always happy to help with that. Sometimes it takes a little bit of looking and research, but we're more than willing to dig in and look at that. When you discover you have an error in your records, you do need to correct that error. You don't need our permission to correct that error. If you've discovered there is an error, you do need to go ahead and correct it. When correcting that error, make sure you're using the current date. Don't post date as if the correction occurred on the same date as the error did. This can cause a whole lot of problems. So please, please do not post date those. Show the correction as of the date you make the correction. One of the problems that comes up, and we talked a little bit briefly with the where your beginning balances don't match your ending balances, is because a correction was made that corrected funds going back into the prior year, so the reports no longer match. The reports that were run at the time didn't have that correction in it. And sometimes it's difficult to trace that down. Sometimes the dollar amount will just, you'll know it. As soon as you see that amount, you'll know what that correction was. But if it's a net effect, sometimes it's hard to trace all of those out. Okay, it is possible to reverse an entry during your current year if you posted something incorrectly, so you want to reverse it. It was posted to the wrong fund, for example. However, if you make that same reversing entry in the current year when the error was in the prior year, it is not going to work, and especially in the case of a grant fund or something that's no longer being used, it can end up with a negative receipt or a negative disbursement in your annual financial report, which is going to cause you problems. So you can do it in the same year. The error and the correction occur in the same year. You can do that reversal. If not, you're going to be adjusting the fund balances. Have any questions? Call Ricky and I will talk you through it. Whatever you correct an error, make sure you document what you've done and keep all of that documentation for audit. You probably will be asked about it, and it's so much easier for you to pull that information up and remember it than try to go back through your memory, a year and a half later and try to remember what you actually did at the time. So keep all that documentation together and have it available. Sometimes we need to correct the annual financial report. If you find you've made an error in your financial records for a previous year and you've already uploaded your AFR, you do have the ability to unsubmit the AFR and make that correction. If you do that, make sure you resubmit the AFR as soon as you make the correction. Otherwise, it shows that the AFR is not submitted. Even though you've submitted it once, it will not show up on the public website, a portion of the website, and it shows that it's not submitted. So be sure you do resubmit after you correct the error. If the audit team notifies you during an audit that they've had something that is significant enough that needs to be corrected, at that time you still have the authority to unsubmit the AFR, make the correction. Once the exit has been completed and all of these corrections should have been done, the field staff will lock the AFR, and then you cannot unsubmit it. You do not have authority to do so. You have to go through us in order for us to look at it and see whether we should be correcting it or what needed to get done. So there have been confusion and communication. The audit team thought you made the correction and you didn't, and now you can't make it. So it can be done, but you sure and contact us because you won't be able to unlock the AFR yourself after the exit's been done and it's been locked. I put this screenshot on here because we did have a lot of questions on this. If you're on the AFR main menu page at the very, I can't put the whole page on there, but you scroll to the very bottom under System Functions, on the very last, after you've submitted it, it'll show in the circle area, it shows that you submitted the date and the time. And over on the left-hand side, there's a link that says Unsubmit Annual Report. That's all you need to do to unsubmit it. If it's not been locked, you just click on that link and it opens those schedules up. You can make the correction, but when you come back to this page, it will show a link to submit it. You must resubmit it. Just remember that point, or you'll be hearing from us. We did have quite a few calls on completing the transfer schedule. I did want to point out that Gateway does generate a report. This is not the schedule, but it's a separate report called Transfers that you can find on the Annual Reports Outputs page. This report shows all of the funds for which you entered a transfer or uploaded a transfer in on receipts or a transfer out on disbursements. So it just gathers that information from your financial data. This is a good place to start to complete your transfer schedule. The transfer reports will show the transfers in aggregate by fund. So for example, if you transferred out of general fund to both rainy day and general drain improvement, it's going to have general fund on the transfers out with the total amount that came out of general fund, and then it's going to have two lines on the transfers in for rainy day and general drain improvement to show the two transfers into that. The total of those, if those were the only two transfers, the total of those would match. It gets a little more complicated when you have money going in more than one direction out of a fund, or you have more than one transfer between more than one set of funds. And that's what you really have to tease apart for the transfer schedule, because for the transfer schedule, you want every separate transfer from fund to fund to be on a separate line. So in my example before, you would have general fund actually on two lines, one time to the rainy day, and then general fund to the general drain improvement fund. And whereas on the transfers report, it would just show general fund once. On the schedule, you want it to show twice. If you have any trouble taking apart, if they match, we can usually figure it out. That's why I'm saying it's a good place to start. If they don't match, we need to go back into the fund data and figure out where they got off. So sometimes the transaction might be posted a transfer out, but into the receiving fund, it's a revenue line, and so they're not going to match in that. So for every transfer out, there should be an accompanying transfer in to the other fund. Sometimes those don't get matched up, and that's where you can get some errors also. I did an exercise on this when we did the quadrant meetings last fall, and that's still available on our on your auditor's webpage under the presentations. So you can look at that and see kind of where I took from that report section and kind of created that transfer schedule. And again, don't hesitate to ask. Everybody we asked, we were able to help. We didn't fail anyone this year. I'll point that out. We had a lot of questions on the OPEB schedules. OPEB is other post-employment benefits. So these are benefits that are paid to former employees after their employment ends if that employee meets the requirements for those benefits. This is going to be similar to pensions, but it's not pensions. So it's the requirement might be that the employee has reached a certain age and has a designated number of years of service with the county. For example, they're at least 55 and they've worked 20 years, whatever is set up in your county. This is similar, again, to being eligible for pension benefits, but all benefits other than pensions that the retiree then qualifies for. It can be health insurance, death benefits, life insurance benefits, disability benefits. Those are all categories that might be an OPEB. OPEB does not include pension benefits, and it does not include termination benefits or payments. So if someone takes, I don't know how often that happens, but if they're taking a payout to leave, or they're getting their vacation paid out or something like that, these are not included in OPEB. Okay. The biggest one we had was COBRA. A lot of times you're putting your COBRA people and your OPEB people in the same pool, but COBRA is not OPEB. Okay. They are different. COBRA stands for Consolidated Omnibus Budget Reconciliation Act. That's a federal law. It provides eligible employees and dependents of those employees the option of continued health insurance coverage when that employee loses their job for any reason or experiences a reduction in work hours that make them ineligible for the health coverage that they had prior. The employee that is losing coverage has 60 days to claim this, and it covers them for up to 18 months. The employee pays the full amount of this premium, so that the cost may be similar to what your OPEB is, but it's a different thing. So even if you're putting them together, you need to tease those out. We do not want COBRA in on the OPEB. How am I doing?
You're good.
Okay.
We got like 45 minutes.
I was looking at 10 hours.
Well, you got new ledge after, sorry.
Oh.
I just lumped them all together.
Okay. So the requirements for the OPEB plans are pretty much the same, or very similar to what they are for the pension. First of all, you have the name of your plan. If you have a name, the type of your plan, you either have a defined benefit, which is a specific coverage. You have health insurance once you retire up to the age of 65, or you have a defined contribution. We put so much money in an account, we'll give you that account, and you can pay for medical benefits when you retire. Those are the two types. What is covered under the plan? So again, we're talking about, is it life insurance, health insurance, death benefits, disability, whatever is covered under that. If you have an administrator of the plan, you need to note that down. It's asking you for participants. So inactive means you have participants that are no longer on the payroll. They've already retired, and they may not even be eligible or drawing benefits yet, but they are eligible to draw but they're just no longer on the payroll. Okay? And then you're going to have people that are still on the payroll that will be eligible for this benefit. The contribution rate, I think, caused a lot of consternation. And believe me, the first time that somebody asked me, I had to scratch my head over this and get schooled on it. So the contribution rate is the cost of the benefit that's paid by the employer. So how much is the county paying to fund this benefit if they are pre-funding the benefit? So if they're set aside money to pay for the health insurance coverage in a separate fund or trust, like you do for pension, then that's what they're going to want to know. Do you put in 12% of the employer and the employee kicks in 6% of their pay? How is that covered? Okay, and then of that, what's the annual covered payroll? Who all of the eligible people to be that you're kicking in on and that they're kicking in. So it's probably not your your part-time or your summer help, but your eligible employees. How much is their payroll? Most counties that I talked to did a pay-as-you-go, which just means when these bills come in, they pay them out. The insurance comes in, these people are added, as retirees are added, they might pay a part of it, and the county pays the rest. That's a pay-as-you-go, and in that case, there is no pre-funded. There's no employer rate, there's no employee rate. You're just going to mark it as a pay-as-you-go plan. Ricky kind of touched on this when she was talking about some of the common arcs that we have. The supplemental AFR reports, they are a little bit difficult in that you're required to put them on your financial report, but you really don't have control over this information. You've got to rely on these departments to get you the correct information. I've listed the main sources of where you're going to need to have an AFR come. You're going to want to contact these departments early in January and have them get that into you timely so that you have the information. So the sheriff has two, their commissary and their inmate trust. If they have a juvenile detention trust, that would also have a separate report. Your clerk's trust and child support funds. If you're tourism, it has their own treasurer, then they need to supply an AFR to you on what the tourism funds are that they control. County homes, if you have a resident trust, that's the one that may not be real common, but if there is one, then that needs to be reported. And then your treasurer has to give you the after settlement collections fund. And you do have some responsibility for these, just as you do with your own funds ledger. So when we come into audit, the first thing we're going to look is, does that beginning balance agree with prior year's ending balance? And again, if it's a minimal amount, rounding errors, don't worry about it. If it is significantly different, you need to find out what that is. So you may need to be in communication with that department to ask why it is different. We do have departments call us and ask us and not even sure where to go to get the balance they're supposed to be looking at. So a lot of it is communication. Make sure you get those lines of communication open as early as possible. You don't know what their receipts and disbursements are. There's no way that you have anything to tie that to, but they should be reasonable. So if you're getting these, each year, if you get a set AFR supplemental report from your treasurer and you're used to putting about $300,000 in after settlement collections on the annual financial report and suddenly it shows $3 million, you might want to check into that. That's not reasonable. But if it's within, reasonable rate, then that's what you're going to go with, okay? If there is an error in the supplemental report itself, that error is on the department that completed it. But you do have some responsibility. If it's really outrageous, what are the controls in place to look at that, get back to them and make sure that these numbers are not just an error, that this was what they intended or that they looked at the right amounts, okay? And when you're doing your review of your AFR, just as you're going to trace all of your AFR numbers back to your funds ledger, you're going to trace your supplemental amounts on your AFR back to those source documents to make sure that they got entered correctly, because those are entered manually. Okay. The supplemental forms are available on our website. They're in Excel, so they can pull those down. They are due back to your office by January 20th. We hope they get them in by that time. There is also instructions for completing the supplementary report that you can refer your departments to if they have questions, and they are always welcome to call us if they have issues in filling out these supplemental reports. We'll be glad to help them with that. Again, our names are on here, our phone numbers, and the county's address if you have any questions or problems on the content, what's OPEB, what's not. Those kind of questions come to Ricky and I. If they're technical questions, sometimes we can help you, but if you're more, probably get a quicker help if you contact the Gateway Help Desk if you're having trouble with the functionality within the system. They're really, really good to help you with that and talk you through those things. So the help desk is, email is on there as well. Some of the questions that we had come in before, one, is there a specific reference to what capital asset policy should say regards to depreciation? How do you determine the lifespan of a road, a truck, or other equipment? Depreciation is probably going to be straight line unless you choose to do another one. But as far as useful life, if that was the question, which seems to be in the follow-up question, is really going to be it's up to your judgment. And if you don't know what it is, it's going to be going back to those departments. If it's a highway piece of equipment, how long do these things last? If it's a sheriff car, how long do these cars usually last? Ricky gave some resources that are still available from last fall's meeting on some standard useful life numbers from the IRS and someplace else, I think, wasn't it? State, I think, that gives you, some basis. Those are all reasonable and could be used. But of course, if you want to, custom to that, if for, some counties, the sheriff's vehicle may last 7 years, and other counties are lucky to get through 3. So, some of that you need to customize for your county. Okay, help with data reports pulling from financial software vendor. Again, if it's a technical issue, you want to go to the help desk. If it's informational or it doesn't seem to be working, we'll be glad to help with you as much as we can. We are more than willing to talk to your vendors if they have specific questions on that. I'm not sure exactly what the issue was in pulling it, so I don't know how much I can answer that question, but certainly reach out if there's a problem on that. Okay. Please reduce the number of additional information requested on the annual financial reports. Balancing all of the additional deadlines that an auditor's office has is overwhelming in and of itself, and any streamlining of report would be appreciated, and any possible report should be utilized by units of government and not just an additional task that will not be looked at further than it is posted. I'm thinking this is the uploads, I'm not sure. We are working with our field to make sure that they take advantage of that, and believe me, they're learning the beauty of that for when they're doing remote auditing, because they can get those reports right now. They're on the website available, our internal website available for them. It's much quicker, so we're hoping that you will see some utilization of that and lessening of requests to you. And were there any questions? That's all I have on this